Hello everyone, Godre here, and this is Follow the Money Hot Stock Edition. This is episode 2 of our Hot Stock Edition, where I basically give you a list of some of the hottest stocks on the Nigerian stock market for the second week of February. A lot of stocks made the gainers list during the week. I'm sure if you were listening to Follow the Money on radio or the podcast edition as well, you would have heard some of the top gainers during the week. So just to give you an idea of some of those top gainers, last week we had Consolidated Hallmark Holdings, we have Multiverse, Dangote Cement, one of the hottest stocks last week, gained 21.83, 20% or so. We have Eterna Oil, Ikeja Hotel, Suno Assurance, Smart Products, VFD, UPDC, and Honeywell Flour Mills. So we're going to be looking at some of the stocks and trying to figure out why they made it to the hot stocks for the week. We're not going to look at all of them entirely though, because not all of them made it to, not all of them are just the hottest stock. There's some stocks that are hot, not just for the week, but they've been hot all through the last few weeks, and some of those stocks we will touch on today. So the first stock that I want to look at is Honeywell Flour Mills. So Honeywell Flour Mills is one of the hottest stocks on the exchange, and they did, top the gainers chart, like I mentioned during the week, gaining 47%. That's just an astronomical number for Honeywell Flour Mills last week. And why did they gain that much? So what I was trying to figure out. And from what we see, it appears that they did have numbers out. It was backed by some kind of fundamentals, as I like to say. So they pushed out their third quarter results, which of course ends December 2024. So Honeywell is one of those companies that have their year end March 31st every year. So they don't work on the calendar year end. So their numbers were out, and it looks like investors really love what they see. So 9 months numbers, the company reported a pre-tax profit of 12.2 billion naira. That is up from a loss of 8.8 billion naira the same period, last year. And so they also recorded for the pre-tax profit for the third quarter ending December 2024, a pre-tax profit of 8.8 billion compared to a loss of 4.4 billion same period the year before. So that quarter basically made up most of the profits that Eterna Oil has, Honeywell Flour Mills has essentially made for the year, for at least the first 9 months of the results. So remarkable numbers. And if you go to distill into the numbers, revenues were also mad. Revenues was 277 billion, up from 123.9 billion 9 months earlier. And my favorite number, operating profits, 22 billion compared to 19.6 billion. Of course, we all know that most companies went through higher cost input prices because they also increased revenues. And so when they're able to eke out a significant growth in their operating profit, that tends to flow all the way down to their profit before tax. And of course, they also had foreign exchange issues. Honeywell incurred 8.5 billion in foreign exchange losses during at least the first 9 months of the year. This compares to 20 billion this time a year earlier. And so if you kind of look at that, it looks like they still had losses, but at least they've been able to recover. So investors are seeing this and saying, look, you know what? Maybe they've basically now are close to sorting out the issues that they've had with their FX losses. But if you look at the company as a whole is still heavily indebted. It has total loan exposure, at least long-term loans of about 23.4 billion and short-term loan of over 7 billion. So in total, it still has 30 billion or so in loans that it has to deal with. So company at some point would have to figure out how to pay down some of those loans. But nevertheless, investors are sensing that there might be some recapitalization or plans to perhaps raise further equity to try and sort out the current situation that it has. So how is Honeywell essentially doing in terms of performance, or in terms of its share price performance? We did look at some of Honeywell's results, and pretty interesting to see how investors perceive the stock. And I can just quickly check here. Honeywell, like I mentioned, has been one of the better performing stocks in Nigeria over the last at least a few weeks. But in terms of whether this is a stock that you want to buy, you want to look at their fundamentals. And from a fundamental point of view, earnings per share is now 99 kobo. Price to earnings ratio 13.6. Remember, price to earnings ratio, the closer it is to 1, the cheaper it is. So it kind of looks like it's on that expensive territory level. Return on equity 28.3%, and of course based on improvement in his numbers, and of course book value per share at 4 times, return on asset 5.1 times. So in terms of his 1 year return, Honeywell has given investors, guess what, a whopping 241% in terms of returns in just 1 year. So if this is a stock that you invested in 1 year ago, when it was trading at about 3 naira or so, or just slightly above 3 naira, this stock is going for like 13 naira 50 kobo today. So that's why it's one of the hot stocks on FTM. All right, so we go to the next hot stock. The next hot stocks that I have here is NEM Insurance. Yeah, NEM Insurance is a hot stock. So you're wondering, why is NEM Insurance on the Goodreads hot stock list, even though it was one of the top gainers last week? Well, it's a hot stock because it's been one of the better performers as well over the last few weeks. And this is also on the back of some impressive numbers. It hasn't released its audited accounts yet, but it did release its unaudited account numbers. And from what that I can see, pre-tax profit did dip in the fourth quarter to 11.3 billion compared to 13.2 billion the previous quarter. But in terms of its full year numbers, the company printed 27 billion in pre-tax profit compared to 19 billion. NEM Insurance is really a money-making machine. Been making profit year in, year out for as long as I've known this company. In terms of its insurance revenue, it did 97.1 billion, did not crack that 100 billion target that I think it set for itself, but very close to it at 97.1 billion, compared to 51.9 billion the year before. So they also saw, of course, premiums go up. And so that also led significantly to, the numbers that you're seeing. And that's why NEM is also looking like one of those stocks that investors seem to like. And in terms of NEM's return, NEM has returned about 85 or so percent in the last 1 year for investors. So NEM investors have been smiling to the bank. And guess what? The price to earnings ratio is 2.8x. That seems cheap. You know what's funny? I've known this stock since when it was like 1 naira, 2 naira or thereabout. Today, NEM is trading at 13.2 naira, and this stock about a year ago used to be like maybe 8 naira or thereabout. So investors in the stocks have almost hit 100% in terms of double. But is it still a buying opportunity? But looking at this earnings per share at 4.6, looking at the share price at about 13, that gives you, like I mentioned earlier, a price earnings ratio of about 2.8x. That sounds like a stock that is cheap to perhaps own. So that is one stock that probably be hitting my watch list pretty soon, because I kind of like the numbers that I'm seeing. So NEM Insurance right up there as one of the hottest stocks on my radar. Now, another hot stock on my radar is a group that they typically invest in, local, in Nigerian businesses, almost operates like a PE firm. I did mention them in my earlier Follow the Money podcast, and it's essentially a multi-sectoral investment company. That's what it calls itself, meaning that they invest in different sectors of the economy, like I said, almost like a PE firm. And so it's called VFD Group. VFD Group did release its numbers as well. And from what we saw gross earnings almost doubled from 45 billion to 83 billion as well during the year. Net revenue, which sort of strips out some of the income that's not necessarily theirs, also more than doubled from 12.19 billion to 32 billion in 1 year. EBITDA was 56 billion. So you can imagine EBITDA even higher than its net revenue. But of course, that's also due to other income that it got during the period. So the company is also sitting on a strong operating cash flow of 4.5 billion, even though that is down from 17.2 billion. 17.4 billion the year before. In terms of shareholders' equity, the company has a shareholders' equity of 61.9 billion, while it has a total debt of 110.5 billion. So total assets on this balance sheet of 328.69 billion, a quarter of a trillion, or more than a quarter, about a third of a trillion in terms of its total assets. So that is VFD, and VFD also aroused investor interest and was one of the top gainers during the week, gaining 30.63%. So is that enough for it to be a hot stock? Well, I think investors kind of feel like maybe it is a hot stock because of its unique fundamentals. And I guess because they've also swung back to profits. VFD, by the way, had a loss the year before. So now that you're seeing it report impressive, basically switched back to profitability, investors like what they're seeing, I guess. And that is why it appears that the stock it's been rewarded now. For this performance. So would we consider VFD perhaps maybe a stock that we want to own? Well, let's look at what the numbers say for us here in terms of price to earnings ratio, in terms of return over the years. Now, let's bear in mind that they did have a share reconstruction happen last year. And so a lot of analysis that you see there tend to forget that that's probably why their share price kind of fell. But on the day, investors shed 10% on the stock today to close at 52.4 naira per share. Its price to earnings ratio is currently 7.3x, while its price to book ratio is at 1.6x. So kind of looks slightly expensive. But it's a stock that has returned 42.9% adjusted for its investors over the last 1 year. So looks like a lot of stuff going on with this company. They did also just conclude a commercial paper offering last week. And so investors probably like what they're seeing, probably like the future of the company in terms of what it has to offer. Bear in mind that for you to want to, maybe take a position in this stock, you also want to look at the price to earnings ratio and be sure that you're getting in at the right price point. I think the highest level that we've seen adjusted again. Remember that VFD just did adjust its share capital recently, but the highest level adjusted has been around 60 naira or thereabout in terms of where the stock has kind of traded in. But at the moment, it's currently at 52.4 naira per share. So maybe this could just be a bargain. Its lowest level that I've seen is around 40 naira 50 kobo. So still not so far off is 1 year low when you compare to its 1 year high. So perhaps this is one area or one stock that we want to look at. Not currently on my radar, but is one that we're paying attention to. Now, the last stock that we're going to look at is Eterna PLC. I really don't like looking at oil and gas stocks that often in Nigeria because sometimes oil and gas stocks can be a little bit complicated when you want to analyze them. But this stock has been one of the better performers for some time, and no surprises because it looks like it's been driven by solid fundamentals. It did gain 22.7% during the week. And so now investors are probably looking at it as one of those stocks that will see whether they can retain that same gain that they had last week, this week. And so But before I get into whether it can sustain that kind of gain, let's even look at some of its fundamentals again. So Eterna also released its Q4 numbers during a few days ago, and full year numbers, pre-tax profit 4.8 billion, swinging from a loss of 11.9 billion. You see, it's gone from losses to making profit. And then in terms of revenue was 313 billion, up from 183 billion the year before. And operating profit, that number, 30.1 billion compared to 7.7 billion. You see, so operating profit was almost tripled, or more than tripled, actually, almost quadrupled. What? More than quadrupled, because 7 times 4 is 28. So more than quadrupled, year on year. Basically on the back of higher revenue, and was able to maintain some kind of improvement in his gross margins, and that essentially led to this to this profit, operating profit that we're seeing. In terms of finance costs, just like most other organizations, they did incur significant FX losses, 16.7 billion compared to 18.4 billion in FX losses last year alone. Now, in terms of share price and why we think investors are probably loving what they are seeing with Eterna Oil. Well, Eterna Oil did shed 5.78% on the day to 42.4 naira. Who knows whether it's going to stay on and probably recover some of those losses during the week. But in terms of price to earnings ratio, pretty much expensive. It's trading at 17.4 times its price to earnings ratio. Well, I guess maybe you want to compare Eterna Oil to its industry, to its peers. You might say, well, it's trading within its industry peers, because if you look at its peers, but then I'm looking at one analysis here, and its peers is trading at 2.4 times compared to it at 18.2 times. But loose. This is maybe it's not just apples for apples. But in terms of 1 year return, Eterna Oil has given its investors 157.1% return. Now, the advantage here is that it's proven that it can give investors reward on their investment in terms of share price appreciation. But can it sustain that share price appreciation going forward? That's a different conversation entirely. And that's where investors also want to be a little bit careful, and not just for Eterna Oil, but for some of the other stocks that have gained this much. So the issue I tend to have is that when you have a significant gain like that, and the price to earnings ratio is high, it always kind of looks like it's been overbought and probably is ready for some kind of price correction. That's what I tend to think. And so that's why I'm like, is this really what, a stock that I want to own at the moment? But if it's gaining rapidly, has like high gain, I think one of the ones I mentioned to you was NEM Insurance, but you're seeing the price to earnings ratio at an acceptable level, then that looks like something that I probably might want to own. And so, yeah, guys, that is Follow the Money Hot Stocks. In case you're wondering which is my own in terms of buy, sell, or hold. All right, so I'm going to give you my buy, sell, or hold for this stock. So we're going to start with NEM, with Honeywell Flour Mills. So Honeywell Flour Mills, I mentioned earlier, buy, sell, or hold for me for Honeywell Flour Mills would be a hold. I just want to hold. If I own the stock, I probably might want to not sell it. But if I haven't bought the stock yet, I might want to wait, because I kind of think like the share price is a little bit too high at the moment. So for me, Honeywell Flour Mills would be a hold, but I don't know why. I just seem to be borderline. I seem to be borderline sell, because that 13.6% price to earnings ratio is just way off for me. So, you know what, borderline sell for me, Honeywell Flour Mills. So if I'm gonna go to NEM Insurance, I like what I saw in terms of the fact that they've given investors 84% or so in terms of return in the last 1 year, and with a price to earnings ratio of 2.8, I would think that looks like a stock that I would buy if I had to make a decision today. So Honeywell Flour Mills, buy, sell, or hold will probably be a buy in my own view. Then of course, if I come to VFD microfinance, they seem to have also turned the corner with some profitability recorded. Return on equity at 23% from what we can see, and of course, price to earnings ratio as well. It's just a little bit high at 7.3 times, and so. Now, should it be, trading at 5 times? Right? I kind of think that I can get it a little bit less, a little bit cheaper at the moment. But this is one stock that if you own already, I think you want to keep because it's probably a stock that will do better later in the year. But if you haven't bought, you probably want to wait a little bit and see if you can shed a bit more. It did shed 10% on Monday, the 17th of February. Who knows what's going to happen later in the week? So this is one stock that I would hold, but keep in my radar. And then if we go to Eterna, Eterna is obviously a sell for me if I own the stock. Just sell, take away your profit, and then wait and see what happens later in the year. And that will kind of be like what I will do for Eterna Oil. A little bit of caveat here. This show, what I'm talking about is just my own opinion, not the opinion of Nairametrics. It is also for educational purposes, of course, and not an investment advice. I'm not giving you investment advice. Make sure that you always consult your financial advisor or do your own research. Like I say, DYOR, or do your own research. Anytime you want to make investment decisions, all we do here is just to educate as much as we can and inform all the time. So this has been Follow the Money Hot Stocks, brought to you by Nairametrics. I'm Godre, and until we do this again, do have a profitable week ahead. Bye.